Welcome back to How to Do, where I talk about today's finance news and start a conversation with you down below in the comment section. So today we're going to talk about Google. We're going to talk about their stock price going down 2.2% today, bringing the stock price to $1,260.66. So the main cause for this is due to Alphabet missing their profit numbers by 23%. Off of the Wall Street Journal's estimation. And we can take a dive into exactly which part of the equation that Alphabet is slacking on for the profits. Either they're not making enough money or they're not saving enough money. They're spending too much money. So I'm going to break that down right now. So let's take a look at the revenue side for Apple this quarter. So we see $40.5 billion in revenue just in quarter 2019. 20% rise from last year. We see that their ad revenue actually increased to $33.9 billion, leaving them with a profit of $7.1 billion for the quarter, missing Wall Street Journal estimation by 23%. Let's take a look at the cost as well. So when we look at the income statement from Alphabet, we see a couple of cost components that are broken down, such as cost of revenue, research and development, sales and marketing, general administrative, and European Commission fines. And we see some steady increase from 2018 to 2019 of the expenses. The one major expense that rises up is the cost of revenue, and that goes up by more than $3 billion from 2018 to 2019 quarter three. And just to make sure they're on the same page, cost of revenue includes such components like raw material costs for making, in this case, the phones, the iPhones, or any other hardware Apple makes, the labor required to make those phones, the delivery of the goods, and the marketing for the goods. So altogether, we're looking at a 24.7% increase from quarter 3 2018 to quarter 3 2019 in cost. We can also see Alphabet losing $1.53 billion within their venture projects as well. Such projects include Waymo and their stake in Uber as well. The net result of their numbers on the revenue side and the cost side leads to a 2% drop in the stock price today. The fear of antitrust regulation coming down on these big tech companies that rely on data such as Alphabet, such as Amazon, such as Facebook, is increasingly becoming more and more realistic, leading to investors pulling out due to uncertainty. This is also leading to these tech companies seeing a little bit of instability in their stock price as well. Antitrust regulations can lead to major changes in these businesses. Regulators can break up the conglomerates into smaller businesses themselves. They can add major restrictions and more rights to consumers on their own data. There really is such a lack of knowledge in the big data space that we just have to wait and see what's going to occur. And now for my opinions on the story, I do believe that the stock price decreasing for Alphabet was justified due to reasons mentioned previously, such as uncertainty in the market due to antitrust regulation coming in, potentially, along with the tariffs coming in as well. We don't know what's going to happen with big data, if it's going to be allowed in the future or how it's going to be regulated, and how that's going to change the way we interact with such big tech companies as Amazon, Facebook, and Alphabet. I also recently pulled out of my stake in Alphabet just due to the uncertainty for the reasons mentioned previously as well. I don't even know what's going to happen. I would love to wait and see what's going to occur within the next couple of months or a couple of years, and to really see how I could step in and leverage the news that comes out for these antitrust regulations. The increase in cost is not much of a scare to me as well. Most of the components of the cost equation for the income statement just incrementally increased. The cost of revenue was a slight scare. I mean, $3 billion is not any sort of thing you could brush over. But that's mainly due to the transportation costs, along with the raw materials increasing in price due to the manufacturing being in China. And of course, we're in a trade war with China. So getting any sort of pieces from China is going to be just X amount more expensive. Along with bringing those phones back to the US is going to be even more expensive as well. Along with the venture arm within Alphabet, I'm not really pushing that into my decision of pulling out of my stake in Alphabet. I do see aggression within the investment side of Alphabet to be a positive without any sort of urgency to grow and to adapt as a company. I find that to be more dangerous than a business that wants to put in stakes within up and coming companies that could potentially be cash cows. For example, Waymo, self-driving, automation vehicles are the way of the future. We see that to be the key for profitability, higher profitability within ride hauling industries, along with trucking, along with just day-to-day activities that people use the cars for. Alphabet putting money into that, along with Uber, was probably the right move to make. Even though Uber didn't really work out as well due to the stock price after the IPO tanking. But I'd love the aggression. I want to see more of Google acquiring and testing out to see what could be the next big thing in the future. Thank you once again for tuning in to How to Dough. Feel free to like and subscribe. And leave a comment down below. Let me know what you think about today's story. Do you believe that Alphabet's stock... do you believe the market's reaction to Alphabet was justified? If yes, let me know. If no, I would love to know as well. And until next time, peace.